Financial planning and the simple ways to do it. Financial planning is a process that involves carefully analyzing and planning your financial goals. Doing so helps you identify areas of improvement and determine strategies that can help you reach those goals. In this video, we will be discussing the importance of financial planning and the simple ways to do the same. If you like this type of contents, do not forget to subscribe for more helpful finance contents. Importance of financial planning. If you're struggling with a financial issue, a financial plan can help you overcome it. It can also help you avoid making costly mistakes. 1. Being more mindful of your money habits. Do you know where your money goes? Without knowing where it goes, you'll be surprised when it gets spent. Financial planning helps you identify areas where you can improve your financial health. It helps you manage your expenses and income. 2. Making wiser financial decisions. Getting good at financial planning is challenging if you don't have enough data. This is because making smart decisions requires having a clear understanding of your financial situation. 3. Emergency funds. A good financial plan can help you identify and prepare for potential emergencies. It can also help you manage your expenses and minimize the impact of unforeseen events. 4. Resolving financial issues. Financial planning helps prevent problems from happening in the first place. For instance, if you're not fully paid for a loan, you can fix it before it gets worse. 5. Becoming financially independent. Financial planning is the process of achieving financial independence. It helps you get out of debt and save for your future. 6. Achieving your life goals. A well-thought-out financial plan helps you set goals and keep track of how you're going to reach those goals. The point of planning is to get where you want to be in life. Doing so requires a lot of work and money. 7. Preparing for your financial future. It is good to live in the now, but it's also good to start thinking about your future. Want to make your life easy in generating copyright-free articles? Try Shortly.ai, an artificial intelligence that creates articles in just minutes. Best part is you can use it for free. Try it now. Check the description below. The financial planning process, procedure in making financial plan. If you wish to do a financial plan but don't know how to do it, then this is for you. Here are the 6 basic steps to take for an easy financial planning process. 1. Assess current financial position. No one-size-fits-all financial plan works for everyone. Having a plan that works for you and your situation is the key to effective financial planning. Knowing the answers to these questions can help you set realistic goals and make changes to improve your financial situation. It can also help you set goals and improve your financial standing. The best way to assess current financial position is to compute your net worth. Your net worth is the basis of your current position, which will determine whether or not you will push through with a financial transaction or not, i.e. to buy something or not. Your net worth is the sum of what you own and what you owe. In other words, it is the difference between the assets you own and the liabilities that you owe. After knowing your financial position, you should learn to examine your cash flows, i.e. knowing your sources of income and your expenses. Likewise, examine your accounts and look for trends, those with unusual values, i.e. your credit card obligation, your high expense on electricity or your high internet bills. Make your life better by making well-informed financial decisions to adjust these abnormal balances. In this regard, it is best advised that before you invest in any venture, you must settle or at least keep into minimum the amount of your liabilities. If you have a dependent family, better have a life insurance as priority before going to investing. 2. Set your financial goals. Your financial goals can help guide you through the process of developing a plan. This will guide you in defining your financial goals. Ask yourself open-ended questions about your goals and needs. How do I envision my life in 20 years? What kind of lifestyle do I want for retirement? Use your present financial situation as a reference point to determine what direction you want to take in the future. Then, consider how money can help you reach your ideal financial future. Create short and long-term goals. You can then determine what you want to achieve in the next couple of years. Short-term goals help keep you motivated to reach your goals. 3. Develop financial strategies. Focus on the 5 aspects of personal finance, which include the following: financial management through monthly budgeting, insurance planning, taxation planning, estate planning, and retirement planning. The strategy must focus in keeping your expenses within the budget, minimize obligation, ensure the future of your family by way of insurance, minimize your taxes, create an estate plan and invest for retirement in instruments such as stocks, bonds, cryptocurrencies, real estate, forex among others. Here are the tips to best manage your liabilities. You can also list down all your current debts by nature and length of obligation. You can also identify the debts with the highest monthly payments or interest rates. You can also explore various options to reduce or completely pay off your debts. Part of the strategy is to create an emergency fund. An emergency fund is a set of savings that you can use when something unexpected happens. An emergency fund is an important aspect of financial planning for many reasons. It can be especially critical if you are a breadwinner or have an irregular income. One strategy that can help boost your savings is to establish a dedicated savings account. This account will allow you to save regularly and get a high interest rate. Another financial strategy is to build wealth through insurance planning. Having the proper amount of insurance coverage is important to protect your assets and loved ones. Estate planning is another strategy that only a few Filipino does. While it may seem counterintuitive for the rich to protect their assets, it is important for the middle class to do the same. An estate planning strategy can help preserve your assets and protect the loved ones you care about most. Retirement planning as a strategy. Aside from building wealth, investing for retirement is also an important aspect of financial planning. You will be able to fill in the gap in money that you need from your retirement up to the end of time. When investing, you should consider the following: how much you will need to save for retirement, how much risk you should take when investing for retirement. Are you learning something new? Please hit the subscribe button. 4. Track your progress. The process of financial planning doesn't end once you've implemented your plan. You should regularly check how far along you're with your goals and how far you're from reaching them. How has my money managed? How has my investments performed? 5. Review and update your plan. Major events can have a significant impact on your financial plan. You should regularly review your financial plan to make sure that it's still working properly. Ask a financial advisor today. Subscribe for more finance contents.